I think yesterday we talked about kind of some of the different areas we have historically seen as the market grinds higher, especially if you kind of zoom out, look at a weekly or monthly chart as it breaks. We've seen everything from 2 and 3 weeks of follow through to 6, 8, 10 weeks of follow through. So really interesting conditions. And I think, Graham's going to talk about his analysis of where we find ourselves, the overall market view. I think one of the things that we both agree on is that right now, trying to kind of draw your line in the sand and saying, hey, I'm a believer the market's going to melt up, or this is the spot the market's going to drop, is a pretty tough game. Which for me, gives me an opportunity to talk a little bit about two-way options, how to trade those, because frankly, that's something that I don't get to talk about nearly as much. I don't do that strategy justice and talk about enough. So I'm looking forward to kind of putting that in perspective as we talk about what's going on in the markets. I hit actually another two-way trade yesterday on IWM. I'm sure some of you in here got that, which puts us on a pretty nice winning streak there. But, it's just, again, we're going to have to, I think, give this market a little bit of time to figure out, is it going to drop with the seasonal pattern and have a slow August and September? Or are we really in this kind of melt up, foreign money coming in, overall positive news, still have the potential of cuts that could be another catalyst. Earnings could be really strong. So just, a lot of potential catalysts there. That's why I don't think it makes sense to get too predictive right now, although I think Graham's going to give you some ideas and some data points of where he thinks we can go. So
Yeah, it's definitely an interesting time, Nate. That two-way strategy is really perfect right now, especially when you guys see the data that I'm going to show you. We did just have consumer confidence and the JOLTS report hit. One was positive, one was negative, and the market's made absolutely no move on it, which I was not expecting. I was expecting to see a quick dash in one direction or the other, but absolutely nothing so far from those two reports hitting. Now, obviously, this week is a big week. We got the biggest earnings names. I think it's 37% of the market cap reporting earnings this week. It's the biggest one of the quarter. And we have a Fed meeting as well this week. So plenty to talk about, plenty to be excited about, but also keep an eye out for. For my Telegram of the week, and today I'm, if you're new here, going to do a market overview analysis, show you where we are. Here is my Telegram link if you want it. We've been trading AMD. Actually, this in the Tuesday session last week, I did an Apex trade on AMD. Here's a chart of it. Profit target on AMD was 166. AMD's at 179 today. It's up another 3% today. We've got a perfect income trade on it. Looking really nice as well. So AMD, they do not have earnings this week, but this stock has just been mega. Let me just pull up a chart here actually to show you guys. It's an entry in multiple of my indicators, which I really like. That's why we did it last week. Chip stocks are normally hot, and if I can get my thinkorswim to move, there we go. I mean, look at this guy. It's been
now there's a chart.
Yeah, there's a chart. Up another 3.5% today. It's playing. We talk about catch-up trades. It's playing the catch-up of Broadcom. I mean, obviously Nvidia. So it looks a lot like those, and it's finally breaking out and breaking out really, really fast. So definitely keep your eye on AMD. If you don't have it already, I already have it. I have options on it. But that's a really, really great one. For the open trades, I really don't have a lot here to show because we ended up closing a bunch out, had some a lot of expire. So I put a little nice line down here. Let's look to add some more today. We got, an exciting week. Some will be more speculative than normal because of that. But I like to fill this guy up so we have some things to show here. Actually, this Nvidia one, 313%, kind of happened by mistake. I had a lot. Always have a ton of Nvidia options opened. Had multiple spreads for this week's expiration and accidentally closed one of the legs with a different leg. So mispaired two of them, and I ended up with 313% on this one. So it looks nice. It looks pretty. But I think it was about an 80% and a 100% one that somehow ended up getting paired together for 313.
Graham, what's interesting about the AVGOs, the AMDs, a lot of those, is that the tech and the chips are really starting to outpace the mags in a big way. I mean, they were for a little while there, but now they're really opening the lead. For example, just this morning, XLK is up almost a full percent, 0.85%. The mags are actually down 0.26% today. So, and if you look at, the comparative chart, they're really starting to pull away. I was actually thinking, I mean, I like Apple for the catch-up trade. I think it's going to, kind of chug its way back up. Have some concerns about Google in the long term and that sort of thing. But I might move and trade XLK a little more aggressively instead of mags directly, just because I think, the AMDs, the Avgos, you're still getting, some exposure to Nvidia and stuff, actually quite a bit through XLK might actually be the better move right now as those stocks continue to power.
Yeah, those are good. SMH is the semiconductor sector. That one's been doing well. Again, that was just a seasonal play for us. It was still below the 200-day moving average for a while. It took a little bit longer to catch up, but then it really rocketed really fast. So definitely loving them chip stocks right now. For the morning market update, here's a look at where we are. I'll go ahead and update this because we are showing signs of maybe filling that gap. Let me get
Bitcoin's basically back to break even on the day as it keeps doing over and over and over again with these 1% moves and then zeroing back out. Unbelievable.
Yeah, we haven't had an entry for perfect Bitcoin trade in 2 or 3 weeks just because it's doing the typical thing where it breaks out and then stalls out. So it's just been stalled out. It's funny. I'll look at it like this morning. I said, "Oh man, it's back to 120." I missed it, but it's really like a very, very less than 1% move on it to get there from here, even though it's a big number. But yeah, it's pretty much parked out. We don't see a lot of momentum in it right now. Okay, markets. Here you go, slightly up. Nasdaq leading the way. Actually, bonds technically leading the way, but they have not broken out yet. But the S&P looking like it might go fill the gap where you got the market internals pointing lower. My 68-minute income trade is pointing lower right now. And the consumer confidence report, we'll talk about reports and job openings. Mixed results there, no market move. So that was kind of the hope for today's intraday rally, in my opinion, before we get more earnings this afternoon. But a look at the week ahead. Again, we have preliminary GDP tomorrow morning. That will probably shift the markets a little bit. Granted, the big focus right now is earnings. And then the Fed interest rate decision, which everybody anticipates, and myself included, there's pretty much no chance that they change it. But what they could change is their tune on the future. However, I do not think that we'll get much of a different statement than usual, and I don't think the markets are going to move too much on it. That's my opinion. Obviously, if they come out and say something wild, the markets will move. But I expect the same thing that they've been saying every single time for the last couple of meetings. Thursday morning, we have PCE reports coming out as well. So you can see this is a pretty long list these are only the 3-star reports this week. So if I do all the reports, there's a trillion of them. But if I just look at the most important, this is a jam-packed week. Next week, you can see here is much, much quieter. Very quiet week next week for economic news. Pretty much jobless claims on Thursday, although we have seen the manufacturing reports move the market, but nothing major, nothing huge. For the charts of the week, just a couple different insights for you guys. And this kind of plays into why the Fed has not changed their tune, why they have not cut rates. This is a 5-year forward-looking inflation expected rate by the Federal Reserve. They are expecting inflation over the next 5 years to tick back up. Not crazy. I mean, that's what, from 2.1 to 2.4. However, they do not feel comfortable cutting rates right now or putting us in a rate cutting environment when they do anticipate inflation naturally picking back up when we do have to cut rates on a slowdown. So it's important that they keep their tools in their toolbox right now, but we'll see what happens. Obviously, everything's going to change next spring when we get a new Fed chairman and appointed by the president. So right now, I don't expect rate cuts. I kind of hope we don't get them, but everything's going to change here soon. Here's a fun chart that I posted in the 60-minute income telegram, basically showing the implied moves over the next month. As you can see, we have not been getting very big moves. Like Nate said, we've just been kind of grinding higher. Well, the implied moves over the month of August actually pick up a bit because we have Fed, we have earnings, CPI, a whole bunch of data. So if you want to just take a screenshot, I actually sent this to Lance too and said you should share this with the 4 p.m. payout group because I know a lot of his trades are based on market maker expected moves. This is just a cool little chart to show you what the market maker's pricing in right now for the month ahead. A slight uptick in expected moves. Another fun chart for you here. Nate hates Google. I actually like Google.
I
did
don't hate it. I
Google.
just have concerns. I just have concerns.
I had major concerns for Google about 3 weeks ago, and then I experienced their AI and saw everything they're doing and said, you know what, I think they might be able to beat ChatGPT in the long run, which is, it's going to be tough because ChatGPT, OpenAI has the first user experience where I still naturally go to ChatGPT way more often than Google. However, their Google search revenue is actually up quarter over quarter, which is crazy considering that it was supposed to be way down with the release of ChatGPT, but
Wait,
it's
did you say
still,
their actual search was up?
yeah, Google search revenue right here.
Oh, search revenue. Totals. Do you know what totals? I wonder what total searches were. Probably because they're optimizing the ads so much better now for that. That's cool though. That's great data. Maybe you'll win me over. Maybe
We'll
I'll buy
see.
Google by the end of the day.
I think it's a great catch up trade. I think it's a long term play, though. It's not short term. Well, I mean, it could be. But for me, I'm looking at Google for a long term perspective. I love how all of their stuff integrates together. I use Gmail, Google Calendar, Google Slides. This is a Google slide. I love how it all integrates together. And as they add in AI, uh, I'm hoping, well, I shouldn't say, oh, I really don't care. But if I'm going to invest in them, I would then hope that they win over the whole crowd. For earnings this week, here's a fun little fact before I show you the names that are reporting. Fun little fact. I copy and pasted this over from Twitter, but basically it said that beats in this quarter are seeing a less than average bullish move. Let me just see if I can show this. This will be a little bit easier to see. FactSet is the one that found this. So here you go. The basically what I'm trying to show here is the ones that miss on earnings are seeing more downside than normal. Actually, it shows that the Q2, okay, this is Q2, so is actually higher on beats. So just more volatility overall. But I swear I read. Okay, so beats are more positive than normal and misses are more negative than normal.
So just
So just more
some bigger
volatility,
bandwidth on
bigger.
both sides. Okay.
Yeah. Which basically, Nate, actually, it's so funny because when I read this, I read that the beats were smaller and the misses were bigger, and that was going to be my point. But it looks like I was wrong on my first read through, and this is really saying both are bigger, which then plays again into how you opened up today's class with the two-way trade being more likely to win in these sort of environments, these sort of
And
scenarios.
I would double down on that honestly because I think as the market has squeezed, people that we're gonna get bigger moves. Like you don't see the market move this tight. I mean, all you have to do is go to a weekly chart. You're only going to get a certain amount of time with the market before you start getting those really big outsized moves. So I think you might even see higher bands to either side here on earnings and just general reaction. I don't, like you said, I don't think the Fed's going to be the catalyst to make those big moves, but I think something will. And then as soon as you get that engine rolling, we'll probably see some more volatility kind of throughout everything.
Yeah. Another fun report for you guys with Amazon on Thursday after the close. Amazon's operating margins are currently at all-time highs, which is good for them. I like Amazon. I like them for the long haul. We'll see if they hit or not, but I just came across this yesterday and said, you know what, I'll throw it in for anyone who has Amazon positions. Curious how Amazon financially is doing. Well, right now, looking pretty darn good right there.
Yep.
For the big names, this morning, we had some names actually. How did Boeing do? Do you know?
Oh, I actually forgot to look about it.
I did not trade it, but I know we talked about it. Boeing
Oh,
is
down
down
three.
2.5, 3%.
Looks like it actually had a pretty nice pop. Over the overnight pop was a couple of 1%.
Yeah, we had Boeing. Actually, I wanted to see how PayPal did because it's normally a pretty good mover. Oh, down 8% for PayPal. But none of these names are the ones I really care about. The ones I really care about are tomorrow after the close, we have Meta,
Yep.
Microsoft, Robinhood, Carvana. Qualcomm could be an interesting one as well. And then Thursday, Apple. I've got a big Apple stake right now in the perfect Apple trade. So this is kind of just we can't predict what's going to happen on earnings, but hopefully they have that spark that lights the engine where they do have that 20% upside from here. We'll see Thursday if they have anything for us. But also Amazon, Coinbase, and a lot of other names. Again, this is the biggest week for earnings of the quarter with over a third of the U.S. market cap reporting this week. The other one that I wanted to talk about is coming up. I saved a reminder for that. For the market overview, let's take a look at what's going on right now. Well, last class I told you buyers beware. It looked like we're getting a cool down. We're pretty topped out. I showed you the RSI. I showed you the CPC, all of the data, and I said buyers beware. I think we're going to get more of a cool off here. Well, what came next? Oh, I was wrong. We went higher. So I did do pretty good there for a couple weeks in a row. But this week, week over week, markets ended up moving higher, which is okay. I didn't buy any hedges or anything like that last week. I just lightened up my position sizing a hair. And stocks ended up going higher, which then gives me more of a little bit of a tizzy of where will we go next. Well, let's look at the data. The fear and greed index, the exact same that we saw last week. This measures market internals, how bullish or bearish is sentiment right now. Still right there in that greed, almost extreme greed territory. This is a chart that's shocking to me, and I
Yeah.
showed it yesterday, but this is our put to call ratio. This measures the total calls purchase and the total puts purchase. Normally, like a good, healthy market on its way up is at the 0.85 number, not a market that's been hitting new highs for day after day after day. Normally, you see that number drop down here into the overbought territory. We are still right here in a very good, healthy number on total amount of options traded. It's crazy to me that calls are not totally dominating the market right now. But what this tells us, just from this one view here, based on the options market, there is more gas left in the tank, which is crazy to me. As far as the percentage of stocks above their 50-day moving average, we just had a little blip week over week. We are still at that trend line, holding it up right now. This is almost the exact same view. Last week it was this, and then this week we're right back where we started for the most part. Where we'll see if it can hold, because if you look at the percentage of stocks above the 200-day moving average, they are near the highs of this recent run. So if we do get a breakthrough here, I expect this chart to come back down to about 50%, which would just be a nice, probably 5% market cool off, which would be really great and healthy. But we'll see what happens with earnings, because that's what's going to drive this market this week. Seasonally speaking, you guys should know this by now, but August tends to be a slightly bearish month, September being a little bit worse for the S&P on average, but that doesn't mean we just hit the sidelines, which just means we're more selective with our trades. Seasonally speaking, on the presidential pattern, and I saw a chart of just Trump's first term as well, and it looked almost identical to this, but seasonally for a first-year president or a new term in office, August and September are also colder months for the stock market. And July is normally pretty hot. So we saw July be pretty hot. Typically, we see this cool off here. So it'll be interesting to see what happens next. Obviously, this can't predict the future, but it does provide us a nice roadmap of what normally happens. So my upcoming prediction, and we're going to cover more on this in a moment, but my upcoming prediction is that this is going to be probably the most unpredictable month ahead, as far as can we actually go higher, or are we going to do what we, in theory, technically probably should do and go a little bit lower. So in my opinion, it's going to go one of two ways, and we'll talk about how to play that here in just a moment. So my prediction is really no prediction. It's just that we're going to get some movement, some volatility, one way or the other. You saw the chart here. Volatility's picking back up. This chart shows it too, with the earnings beats and misses bigger than usual. So we'll see what happens, but I don't have a clear line in the sand of if we are going higher or lower like I normally do. For the sector view for August, the sectors that are normally strong are infotech, which is XLK. That's what Nate was just talking about as a good sector to play right now. Utilities, and real estate. And I've been avoiding real estate just because of the interest rate environment we're currently in right now. The rest are normally down in August. So for the sectors, I told you last class, I like technology. We've been playing technology over and over again. And then I added in utilities because utilities was strong and seasonally a strong one as well. Well, this week for the shifts, and this is our power rankings here of sector strength, utilities fell 3 slots, fell out of good graces, fell out of favor for us. Just consumer discretionary popped up. I would not necessarily be buying that right now. I think that would be very speculative to do. And then some movement along the bottom one. So for my top sectors going into August, I pretty much only got technology, which is funny that Nate, that's what he was just talking about at the beginning of the class. Technology looked really good, specifically those semiconductors. Industrials are strong. Consumer discretionary would be a speculative sort of play here. And materials if you want to trade something to the downside. However, my big note right now is this is not a time to be going heavy on bullish swing trades, in my opinion. There's much more downside risk than there is upside potential given where we are right now. So what I'm going to do, I'm going to keep trading like I always do. I'm just not going to take huge positions. If we do get a flush out, then I will start doing those bigger positions again. All right, for the nitty gritty, we're going to get to some trade opportunities. Let me pull up my handy dandy opening playbook trade doc so I can post them in there. Again, last week, Apex, we did it. AMD, the thing rocketed. Options are up nicely as well.
Is
For
that
this week,
is that a closed trade or is that one's open right now?
I've got it open right now, but it's at the profit target there. It might have even fired again, to be honest. Let me just pull up the chart. I looked at it yesterday and it was right at the profit target when I was putting this together for you guys.
I almost traded AMD in
Yep.
our income machine class, and I did something I never do. I wimped out because it's just so straight up that I'm like, geez, can I even trade the stock? And I always say I don't care about overextended. There's no such thing as overextended. And even I, of all people, looked at that chart and just like, I can't trade it this high. And then boom, up 4% again today. It's unbelievable.
Yeah, so this was actually the signal last week. It hit the target and fired. So if you have the apex indicator, you would have gotten a new signal on Friday. Of course, this class is on Tuesday, so we didn't get to see that second signal, but we got another one on Friday, and it's already hit that profit target too. So it's just been a monster. We've got it in the perfect income trade. Pretty volatile, so I mean it could drop 3% in a day, but so far so good.
And where's it at relative to its all-time highs?
Let's see.
Okay, we've
All-time
got
highs, 227-ish. Let's see what that high says.
30%
Yeah,
still. That's
220.
crazy.
Yeah, a lot of room for this one, and it's doing that. I mean, exact same catch up like AVGO.
Yeah.
Um, but now it's just delayed, so it's going to have to move a little bit quicker, which we're seeing right now. So AVGO up 1.5%, AMD up 3.5%, we'll call it percent. So we're not going to trade AMD this week. We've already got that on the books. I am going to do one on O'Reilly. This is technically a consumer discretionary stock, but it is also pretty much like a staple stock since you have to get your oil changed. Um, so I like O'Reilly right now. It's been a beast over the years. It did go into a little bit of a slump there for a bit, but it's just gone back. I mean, just look at this. Look at all the blue arrows. And the profit target keeps moving because it keeps getting new ones, but you can see it hit on almost all of these stop loss there. Hit, eventually hit. So we have a new one here on O'Reilly right now. And this is a pretty wide profit target for the stock. It's about a 5% move here. Of course, look at that Newton looking nice too. Let me open up my cheat sheet for you guys because I do believe, based on memory, this one may take a little bit longer. So we just want to make sure we put the trades in the right way for that. O'Reilly is typically an 11. So it wins 84% of the time we get an apex entry, 5% average move. Takes about 11 weeks. So I'm going to give this one a little bit more time to get there. So this one's going to be a little bit longer of a play, and we'll see what the options look like. Let me tighten this up. So what is this? August is 2 weeks, 6 weeks. Oh, no October.
Mm.
That's tough. All right, let's just do September, and we'll just cut it in the middle. They have fractional options because of their split. But let's see. That's going to make it weird. Do not trade the fractional ones, FYI. They're just going to be hard to get in and out of as time passes. Harder, I should say. But this one looks pretty good. Let's see. 163. Oops, sorry. 4 divided by 163. So 145% profit opportunity here on O'Reilly if it gains about 4% over the next month and a half. So that would put us, September 19th. So there where my crosshairs are, it doesn't have to go crazy. Actually, let me drop it right here. It just has to keep chugging along steadily, even if we do see a drop in the near term or some, cool off. It does not have to make a big move here to hit our target. So what I'm going to do is I'm going to type this up in our other document here and then post it here in the chat for you guys. But it's O'Reilly is the ticker. ORLY. For the options, I'm going to buy the 19th of September, 2025, $100 call, sell 19th of September, 104 strike call. This is currently at a net debit of 160. And our max value here is $4. It's the difference of the two spreads. The fractional options, yeah, it's just because they did a stock split, so they have to split the options too, and it makes them really weird to trade until they get the new ones listed. So there you go. There's the Apex entry. Now I'm going to also walk
By
you
the
guys
way,
through.
Tim mentioned Advanced Auto, those stable stocks. Advanced Auto is a pretty rough stock, but AutoZone, AZ, well, wow, Graham read my mind. AutoZone, on the other hand, much, much better stock. Tim, if you want to trade a boring car company, I would much prefer AutoZone than AAP.
Man, I would hate it if my account looked like that. I'm just joking.
Yeah. Yeah.
Look
So
at that.
just a
Doubled in the
little tip
last.
there, Tim.
AutoZone of all companies has doubled in the last 2 years. That's crazy. But yeah, O'Reilly, very similar. Business model also has doubled in the last 2 years as well. Which is great. If you look like over the last 20 years, these are some of the best stocks out there. All right. So let's go to our calculator since we gave it to you guys. Let's practically walk through it here. So I'm going to go to the debit spread target assistant, see if Nate updated it for us.
I haven't done my credit spreads yet,
All
but
right. So we're
we'll
buying the
get it
104
done.
or 100 strike. We're selling the 104 strike. Our entry price is actually, let me send it off because I never shipped that trade. It's 165 now. All right. My entry price is 165. I put 3 contracts on. I'm going to leave the profit target blank for now. So here with our handy dandy calculator that is available for you all in the opening playbook VIP portal, I can see my spread width, my max value based on my contracts. So the most that this will be worth is $1,200 for me. My max profit, $705, not bad. So if O'Reilly chugs along here over the next 6 weeks or so, make $700 for doing nothing. And then my risk, I put $500 roughly on the line to make that. So once Nate updates this, it'll show you the percentage return, which is about, let me just give you the number here versus giving you an about. 4 divided by 165 minus 142% total ROI, total return on investment if the stock gains 4%. Pretty awesome. However, for those of you who want to use a profit target, this calculator does it all for you. If you just want some basic ones, 25%, 50%, 75%, they're listed right here. So if you want to shoot for a 50% gain here, you would set a limit price at 247 so that at any point the options increased in value and got to that which is not far away. It's about, I bet you if this stock moves a buck or two, you should be getting pretty close to that. You will get your 50% target. If you want to do a custom target, maybe you want to go 100% target, you would set a limit price at 330 so that at any time, if it gets to that price, you can, automatically be filled whether your brokerage is open that day or not. You can not even be logged in and we'll take care of it for you. Where can you find the calculator? That is in the one-click trading portal for opening playbook. Scroll down, it's right there. TT, Bob, what is TT?
Tasty trade.
Tasty trade.
And Bob, is that for a specific option? Like if it's one of those specific options that they're trying to get off the exchange, maybe it's that, but
I can
I
open
don't know.
these. Let's see if these don't show anything for me, but yeah, mine is buying to open. Let me see what happens if I trade the fractional ones. These are to open as well. Not sure why Tasty did that to you. RJ says filled at 163, so you got a little bit better than me. There you go. All right, let's keep this chugging along here. Oh, there you go. I just got filled at 165. For the hot sheet pick of the week, and it's funny, someone asked in the chat about this as well. Walmart, which has been it was a really great stock for a while. Got a little sluggish there during the tariff chaos. As you guys know, most everything did. We haven't seen it hit all-time highs post that period, so the drop kind of looks like Amazon a little bit. They do have earnings coming up on the 21st. However, seasonally speaking, over the next 18 days, it's gone up 100% of the time over the last 10 years. That does not mean it's guaranteed to go up again. However, we know playing off the data, this is seasonally a very strong stock during what's normally a pretty dull month. So it averages a 2.5% move on the stock during this time period, and we're able to trade it before earnings. Let me just check that earnings date again. August 21st So 18 days will be up before that earnings date hits, and we can place a trade on Walmart. Of course, right before the
Of course, you straddle that earnings date
I know.
perfectly.
All right, we'll do the 15th here. That gives us about 16, 17 days here in the position. Walmart normally gains 2.5%, so that would put it right around $100. Let me go ahead and see what it looks like to do it at $100. Okay, this is pretty awesome. I'll give you guys an aggressive and then a conservative play on Walmart, if that sounds good to you guys. And actually, I shouldn't use those words because my definition of those are far vastly different than Nate's definitions. My aggressive is more than 100%. My conservative is about 100%. But let me go back to my handy dandy trade sheet. So I can type this up. But first off, I'm going to give you the aggressive one, as I call it, basically shooting for a full move on Walmart to make that full 2.5% move. And this one's going to target a little under 200% return on investment. I'm going to buy the 15th of August 99 call, and I'm going to sell the 15th of August 100 call. This is right now at a net debit of 39 cents. I'll post this in the chat. This is my more aggressive play where it has to make the full move. But basically what you're betting on here is you say Walmart typically gains 2.5% over the next month. So you're going to bet with this trade that I gave you, if you were to do that, you basically bet that Walmart can continue this trajectory. It's not even a crazy one. Again, it's not all-time highs. It's kind of right in line with the trend lines where they've been hitting. But by this date, if Walmart's above $100, you should make 156% return on investment. So Walmart gains 2%, you make 156%. Pretty good deal, if you ask me. Now, for anyone who wants to go a little bit more conservative, that's 97.5, actually. Oh, this is perfect. Liquidity's there, good. All right, I'm going to give you guys a more conservative, and it's not conservative. It's still shooting for 100%. But I'm going to buy the 97.5 call and sell the 99 call. This is essentially a wrap order of the current price because it's kind of in the middle here. You could probably do the 97 and 99 as well. It's a little bit more expensive. So this is trading at 75 cents or 76 cents now. Here it comes. And this is the one I'm going to do. So 75 cents. And you will see here, instead of needing to get to 100, we just need it above 99. So we're just lowering the overall move needed. Only need about a, what is that, 1% move, a little over 1% from here over the next 17 days or so. And if so, I make 100% return on investment. Tony, for Walmart, 39 cents risk to make 61 cents. Yes, exactly. So about 150% return on that first one. Can you do both? Just if you're going to do both, make sure that you don't end up, because I have this one here. So I have this sold, and then I would go to buy this one. I would buy the 99 again, and my brokerage would offset me. So you just got to make sure that you have them set to open so that it doesn't sell your current one, if that made sense. That's what happened on my NVIDIA trade. Accidentally sold a strike that I already had without really paying attention and ended up with a big old winner, luckily on that one. But that's why you got to make sure to just check this, not having it as auto, but make sure it's to open if you're going to do both. All right. And last but not least for the week, let's go check out the Newton scanner. Linda's asking, do we close or let it expire? Same thing. Take it to the calculator. Let's type in that more aggressive one here. 99, 100. It was trading for 39 cents. I don't know how many contracts you did. We'll just put it at 5 for fun. All right. So the calculator tells you total, if you leave it, let it expire, here's the max you can earn based on your risk. That's the profit over risk. So total value, 500. If you want to set a target, if you want a 50% target, that's not that big of a, like 39 cents to 58 cents. The stock does not need to move that much. in my opinion, to see that happen because it's well below the dollar max width. But if you want to set a custom one, maybe you want to set a 100% target. Again, calculator does that all for you. It's pretty awesome, pretty nifty. So Linda, if you want to let it, or if you want to set an auto close, depending on what you want to do, just come in here, punch it in, and it'll help you out there. I'm just going to let it expire right now. Is how I'm playing it. That's what I should say. All right. Let's go ahead and flip on over to the old Newton. So this is our bullish scanner, the ones that are looking for stocks that are increasing in momentum. And again, I want to see a pretty chart. BSX is really pretty. It's a healthcare stock. Healthcare sector is not strong, relatively speaking. However, seasonally, it is a strong one. I'll just show you again. So again, here's healthcare right now. It's at the bottom, but seasonally, it's very good in August. So it doesn't align on all fronts for me, but it aligns on a lot of them in the sense that it's in a good bullish trend and in a seasonally strong sector. Let me just check out the other two. So BSX, let's go ahead and do one on BSX. We haven't done a Newton trade in a little bit, so let me go ahead and type this one up. Newton entry. If you want to trade the calls, I would look to buy at least 45 days out, probably one strike in the money call here, just to help avoid time decay, but you're still going to need this thing to move about $3 for you to break even over the next 45 days. So you need about a 2-3% move for you to break even. I'm not going to do that. I'm going to try to play just a weekly move on this guy for next Friday. So I'm just going to say, what can it do? 108 was the high, the recent high. 104. I'm going to play next Friday's expiration and basically give it 10 days. We'll see what the wrap order's priced at. 58 cents. That's not that great. This would be a bullish bet. They're all bullish, but it has to move. So the options I'm going to give you here are the 8th of August expiration. I'm just going to make a bet that it can trend ever so slightly higher in the direction. All right, it's headed in this direction. Let me zoom out. Headed in this trajectory. I'm just going to make a bet that it can keep doing that over the next week, knowing that the stock is hot and seasonally the sector is hot. So let me type this up for you. BSX is the ticker. Boston Scientific buying the 8th of August. 107 call. Selling the 8th of August. 108 call. This right now is a net debit of 50 cents now. So I will double my money because the max value is $1, the width of the spread. I'm going to set a limit order. Make sure you use limit orders. Oops, let me get 2 of them. And I will see if I can get filled. No, filled right away at 50 cents. So again, I'm just basically betting that this thing will just drift. So you see my crosshairs here. By that time and date, I'm betting that it just drifts in that direction. If so, I double my money. So it does not need to make a huge move. A little over 1% on the stock will do it. Now let me take a quick pause here because I just realized I always go approach each day assuming that you guys have been trading with me forever and you know what the heck I'm talking about on every single one of these. How many of you here, this was maybe one of your first times trading with me and Nate today, or just be blatantly honest, how many of you here were a little bit lost during that last 15 minutes? Well, if so, I apologize. I should have slowed way down. I've gotten to a rhythm of each Tuesday I do the same thing, so I just fly through it. Looks like a lot of people are new.
It's actually cool to see that there's this many people lost because that you guys I think are in the right place. We talk a lot about how to kind of use structure and understand the markets by using advantages that I just don't think are in the mainstream for people, and so I'm pumped to see so many different people.
All right, well, here's what I'm going to do. If you are newer, feel lost, or first time trading a debit spread, or you don't even know how what the odds were that I was talking about, and you don't know if this is good or not to make this bet, don't worry about placing trades today. What I can do is Thursday, Nate, we don't have any official training booked up, right?
Right.
Thursday, I'm going to do my full presentation on these type of trades. It's a wrap order trade, as I call it, just a basic at the money debit spread. But I'm going to do a full hour breakdown to teach you it. And I'm glad we actually had this moment, this epiphany, because I haven't done that in a while. And I would like to take you guys through that so you can see what I'm talking about, see how it works, see how the calculators work, and we'll do some trades together too, some practice trades in that full hour workshop on Thursday. So make sure you're here Thursday morning, 10 a.m. We'll do the wrap order training. I'll walk you through it, and then we'll pick some trades together. And I'll go about 10 times slower than I did right here.
And just one more plug for the opening playbook VIP guys. One of the first videos you'll see in there is how to trade debit spreads. I really can't recommend watching any video higher than watching that video, because so much of what Graham and I do is not just using a debit spread for the sake of the trade sounding good. It's because it has a structural advantage and a conceptual advantage as well, that once you understand that, I think really opens your eyes and changes the game. So I took like an hour long, step by step, really slowing and explaining not just, hey, a debit spread is buying and selling a call at the same time, but the structure of why we do it, how we do it, what the benefit is, how it actually works in real time. So again, I think if you understand that, a lot of the rest of the world of what Graham and I talk about and how we go about the markets really starts to open up and make a ton of sense. And honestly, I just think once you learn that, then you can kind of write your own ticket in terms of, hey, I like this trade idea. Let me now structure it in a way that makes the most sense based on what I believe about the market, versus just being at the whim of waiting for one of us to tell you or trading a regular call and put. So really recommend that.
Yeah. All right, I'm looking for a bearish one for us. And this one, everybody has earnings, of course, so it makes it tough to choose. But there is a material stock that I've never traded before, ECL, that just had earnings, I'm guessing, this morning. Yeah, this morning they had earnings, down big on the earnings event. Let me just go back and see. That's what I don't want to, that wasn't even earnings. I'm afraid if we trade this one, just because it's red on Newton, well, it's because of the earnings reaction. So that's typically something I would avoid. And it looks like, it's not like it drifts. I can't see a one in the past where it's drifted directionally in that, and with following the earnings event. So I'm going to pass there. UPS is industrials. They just had earnings. Man, poor UPS. How are they getting drilled so bad? Is it Amazon? Terrible looking stock. But these are the Newton short scanner stocks. Again, a lot of them have earnings here. You can see pretty much all of these. Disney, Procter & Gamble just had earnings. EA, Booking. So I'm not going to take a short one today, but you could just, if you want to screenshot this list here, just to keep an eye on them, be my guest. But again, a lot of these are going to change based on how the earnings reports come out. So again, Thursday, I'm going to do a full breakdown, much, much slower than what we did today. I'm going to walk you through the style of trade, how I believe, just the math behind it. You can decide for yourself, but I believe that the odds are far, far better than trading any other style of option. So we'll do that Thursday. Make sure you're here. But again, for the recap for today, this is one of those rare weeks where I basically say, I do not know. I do not have a conviction on if we are going to go higher or lower over the coming weeks. My gut says lower, but earnings can change everything. News can change everything, and the stock market is definitely showing strength right now. And you don't want to be the guy who spends 2 months trying to guess the downturn. Last time I predicted the downturn was right about here. Nate, you probably remember that, early
Yep.
February. I
Yep.
said we're about to see a big, big correction, and then a couple weeks went by, nothing, nothing. Went to all-time highs again. I said, "Oh my word!" And then it finally came. So I may be a little bit early on last week's prediction. This week with the earnings reports in the GDP, the Fed, and so many other big things coming out, it's just going to be a coin flip here over the next couple of weeks. And we're seeing volatility pick up and respond accordingly. So